Good afternoon. I'm personal injury attorney Jeff Adelman, and this is another edition of Questions for Lawyers. I'm honored to have my friend Neil Rumbak with me today. Neil is a tax attorney, and with April 15th right around the corner, who better to have on the show?
Right, Jeff. Thanks for having me.
Oh, absolutely. I'm sure. Well, listen, I'm sure that you are very busy this time of year, so I know that everybody is appreciative of you coming on here and doing that. Can you tell the people watching a little bit about your education? Because, listen, I went to law school. I got my law degree, but you went and got a little bit more. And can you tell us about that?
Absolutely. So I went to University of Florida Law School, and many of the classes I wanted to take that weren't necessarily tax classes, like estate planning classes dealing with drafting certain documents, required that as a prerequisite that you take a basic income tax course, federal income tax. I had no background in it. I was actually a criminology major in college. I had no accounting background or finance background or anything like that. And I took the course, and I realized as I got into the technicalities of the tax law that I really enjoyed examining them, that I really enjoyed seeing. It was fascinating to go through. I mean, I'll admit I'm a geek. I'm a tax geek, and I'm proud of it. So,
well, you're in the right field.
So I really enjoyed examining things and seeing how, if you go into detail, you can help clients reduce issues and save money. To me, that seemed fascinating to get an end result like that, if possible. And I started taking more and more classes in tax as a result. When I was at the University of Florida, the University of Florida has a great tax program.
I think they're number 2 in the country or something.
Number 3.
Right.
And had some great professors who really inspired me to move forward. And I hope I make them proud now because they were really, really wonderful.
You told me that somebody wrote one of your textbooks. Who was that?
Oh, right. Yes, Elizabeth Warren, of all people.
Senator from Massachusetts.
Senator, presidential candidate. She wrote one of my textbooks on consumer law, which is, if you follow, something she really is passionate about.
Wow. So she actually wrote the textbook.
She actually wrote the textbook, yes.
That's pretty
really interesting.
Well, let's be honest, though, Neil. You're a really friendly guy, but people are coming to see you because they don't want to see this guy. IRS. Yeah, I couldn't resist it. I'm a wrestling fan. I don't know if you remember this guy. This is right. The Erwin R. Shyster.
Correct.
Okay. He's coming to put a tax lien on your property. You are there to protect people from the Internal Revenue Service, correct?
Correct.
Okay. What can the IRS do to you if you don't pay your taxes?
Right. So I'll go back quickly to also say that when I finished up, then I went to the University of Miami. I got my Master's of Law in Taxation. So I did an extra year focusing on different taxation.
Yeah, that's the LLM.
That's the LLM.
So
and so I came out with got a lot out of the program, gained a lot of knowledge. Now, I just wanted to point that out. But
I appreciate that, and that's important because you don't just have a Florida bar, you don't have just a degree, a JD, but an LLM in taxation that gives you that extra expertise in tax law. That's why I asked you to be here. But getting back to our that scary IRS. Right. If you don't follow the rules, what can the IRS do to you?
Well, the IRS, I see as possibly the most powerful collection agency, maybe in the world, but certainly in the United States.
Sure.
And has the backing of the federal government behind them. So they have a lot of power. Taxpayers have rights, but at the same time, if you don't pay your taxes, they can assess back taxes. And then they can also go and whatever you don't pay then usually is subject to interest that compounds very, very quickly. And then civil penalties Eventually it could get to the point where they do actually collect on you. They can actually get a hold of your bank accounts if they find the information and garnish your wages. They could actually, if you have a car, they could just show up and repossess it. It usually doesn't get to that point, but collection, and then immediately when you owe taxes, you also the IRS will usually file a notice of tax lien in the county records.
They're not a good enemy to have.
So they're not a good enemy to have. And then really, if you're extremely egregious, then we're dealing with the penalties get much, much worse, but we're also dealing with criminal issues.
Absolutely.
Which is something to have in mind. It can be a very, very serious thing.
Well, don't they always say the police, they could never pin it on Al Capone, but at the end, the tax man got Al Capone.
That's exactly
Isn't that right?
Right, and it's come up now again with with that college admission scandal and Becky, where they're saying that Lori Loughlin, that they're saying that they could have committed some tax fraud there too.
Wow,
and it's going to be very, very interesting.
So, to a certain extent, the services that you offer could keep somebody out of jail.
But to a certain extent, yes, and I think that's always important to keep in mind, even if it doesn't appear likely. And it's important to consult with a tax attorney in addition to an accountant or someone else, because the tax attorney has, as an attorney, a much broader scope of privilege. So things you tell an attorney, many more things you tell an attorney are protected from admission in court or in an agency. CPAs have some privilege, but nowhere near as much as attorneys. So if you really want to have open dialogue and really figure out the best way to approach your situation, it's good to involve an attorney. Many times CPAs with whom we work will say to the person, hey, you may want to talk to an attorney on this issue.
What would you say one of your biggest referral sources would be CPAs?
Yes, absolutely. We definitely refer back and forth.
Now, I understand that you came bearing a gift for me today, which...
yeah, Jeff,
What is it, Neil?
It looks like this came in. It looks like you've been audited.
Oh my goodness, look at this. It's an audit. No, I didn't really get audited. This is a real audit, though. As you can see, it's a letter from the Department of the Treasury. And this is an actual audit notifying somebody, one of your clients that was audited?
Yes.
Okay, well, let me ask you this. There's a guy I know, let's just call him Donald, okay? And he says that he doesn't want to release his tax returns to the public because he's under audit. My question to you then is, would my friend Donald have received a letter like this?
Yes, he likely would have received a letter, probably many letters.
Okay.
By certified mail.
By a certified mail.
Usually by a certified mail. It's the IRS usually will initially contact you via certified mail or via mail at least.
So they don't call you up on the phone, hey, you're under audit.
Very, very rarely. You have to watch for recent scams who kind of call you and say that, because the IRS is generally not going to operate that way.
Right.
And they're certainly not going to threaten you with that if you don't pay, you're going to be immediately arrested.
You're going to get a piece of paper.
Right, correct. You're usually going to get a piece of paper. Definitely, a piece of paper will usually arrive via mail. Definitely, most of the time, I'd say via certified mail, and you're not going to receive emails either.
So when
IRS
a potential client comes to you who's under audit, what is some initial advice that you give them?
First thing as a tax attorney that I was taught is to ask if they have them. Some do, some don't. Can I see your tax returns that were audited? And maybe a year or two before, maybe a year or two after, depending on it. Take a look at the tax returns. Take a look at that audit that you, this thing.
My gift.
When you got audited. See what the IRS, because the IRS is going to tell you you're audited. So they're going to want to set up a time to meet and resolve the issues, and they'll tell you which items they are examining.
When they set up an appointment to meet with you, is it like an under oath statement or like a deposition, or is it informal?
It is it is informal. You are saying things subject to penalty of perjury.
So you are under oath.
But unless you are summoned, receive a summons from the IRS, you don't have to be present. So you can have an attorney present for you.
Oh.
And, I usually encourage that.
Yeah, I can understand why.
That most clients are better off.
What do all the judges always tell the jury? What the attorneys say is not evidence. And what
Correct.
You say is not evidence. So it's worth it to have you there as a mouthpiece.
Right. I mean, look, the IRS, many of the people auditing are very professional, and they keep very good notes. So what you say will kind of be used against you, although it has an informal feeling to it. Mm-hmm. So at the same time, this is where may come in someone who's more knowledgeable with the tax law is what you don't say is used against you also, because they're asking for information to verify what you've admitted on your returns.
Well, so let's say to this scenario, potential client comes in your office. Hey, Neil, I didn't file my returns for the past 5 years. Now, after you're done slapping them a little bit, what do you advise them to do in that situation?
So what I advise them to do is, because we don't have returns, is to not bury their heads in the sand, because the IRS is not burying their heads in the sand. And a lot of times people feel stuck. And the first thing to do is at least take action. And one of the things we do is they could come in, we'll discuss their situation, and we'll try to, the IRS has transcripts of income that people have received through forms. You get like 1099s and W-2s and those types of things the IRS also gets. That's how the IRS can oftentimes match what you have on your returns to make sure you're reporting correctly. What we do, if I can access the transcripts, and I can look and see what's on file. And then from that, we can determine whether they needed to file their returns. They usually do. Sometimes actually, they don't, or sometimes it works out in their favor to file a return because perhaps they're entitled to a loss that they didn't notice. And other times they would have to pay, and they would be subject to a significant amount of penalties. But you have to kind of start somewhere and work through it. And if you have to set up some kind of plan with the IRS or whatever it is, it's important to do that to keep yourself in compliance, both civilly and also not to prevent further problems in case anything can happen.
If I can paraphrase, it's almost like if you're in that situation, you're almost better off falling on the sword and saying, "Oops, I didn't do it. I'm going to start doing it," rather than continuing to go into year 6 and year 7 not filing an income tax return.
Correct. So that's what I do, but the transcripts are kind of where I start. If I don't have a tax return first, I contact the IRS, or I can access the transcripts online if I have a power of attorney, and I review everything from there. And then a lot of times we can work with a competent CPA who can reconstruct things in the best possible way.
Audit is a very scary word, which is why I keep saying it, because scaring people gets people to watch, I suppose. But is it unusual for somebody to get audited? Like, for example, should every person watching here expect at least once in their life they're going to be audited, or is it somewhat unusual?
It's somewhat unusual. Very few people actually are audited. So most people are not audited. It's usually something we don't know exactly how the IRS, in some ways we do, but in a lot of ways we don't know exactly how the IRS figures out an audit. They have a kind of a secret formula. But something wasn't right on their radar, and they're looking into it. And it's a very small percentage of people.
It's good to know.
Yeah, it's good to know. It's also good to know that audit, sometimes they'll use the term examination, and it's pretty much the same thing, audit and examination.
Okay.
I know that confuses a lot of people. It confused me initially too. But although not an audit, a lot of people consider when they receive some kind of notice from the IRS to say, hey, it's not an audit, but it's something saying, hey, our records show that there's a
They
1099.
go, you.
Yeah, there's a 1099 for $20,000, and you haven't reported it for 2018. If you owe this amount, with penalties, they'll compute interest. Please pay it. If not, please provide us additional information. That happens much more frequently, but that can be resolved much easier than an in-person audit, or even an audit via. Some audits are actually done just via mail-in. They don't actually involve an agent, an in-person agent.
At the end of the day, Neil, if somebody is coming to see you, a mistake has been made. Can you tell everybody how they can avoid getting audited by the IRS?
There's no exact way to be audited. What you want to do is, in case you are, first of all, follow all the rules, follow all the tax law, make sure you have really good preparers that you've, tax return preparers, accountants that you've researched and you know that they're good, and they're all available. Their information is available online, and make sure that you don't have any that they actually sign the return with their names. Otherwise, they have what they call them ghost returns, where they'll just say, "Here, we prepared it. Here you go," and then they're usually some kind of scam because they'll take a percentage of your refund, which you're not allowed to do. That's how they get paid, and they figure out how to enhance your refund. But what you want to do,
so any tax preparer that's saying that they would take some of your refund,
right?
Run.
Correct. But what you want to do is follow the law very well. Work very well with a CPA who follows the law. Possibly run a question past the tax attorney just to be sure. If you want to.
And if anybody here has a question about who, like for CPAs, who would be a quality one, several CPAs yourself.
Some great CPAs.
Okay. So they could call you and ask?
Absolutely.
Okay. Before I forget, what's your telephone number?
Yes, so it's you can either call me at 954-944-3929 or 561-948-2298.
Okay,
one.
And we'll post it on there as well.
Right.
But if somebody has some questions about their tax preparer, their CPA, you can refer them to a competent CPA that you trust.
Absolutely. I think the other thing is, how to avoid getting audited. That's the first thing. The second thing as well, you want to keep very, very good records of your income and your expenses, receipts, or whatever else, in case you're audited. So you can provide that information if it comes down to it, and then you can sleep at night knowing that you have the information to back you up.
Well, that's always good to have the backup.
So right, as a that backup plan is very, very important, because if you see this audit that you got here, right?
Mm-hmm.
So a lot of the things that people don't have documentation for, employee expenses, probably they went out to eat and that kind of thing, for business as an employee, and they didn't keep their receipts and say who they were, with whom they were eating and what the meeting was about. Same thing with mileage, or
these days it's pretty easy to keep track of that too. You can just put it on the notes on your iPhone and save it that way, just to have something.
Exactly. Be very clear what everything was for, and keep honest. But you are entitled to deductions. You are entitled to what's favorable to you tax wise. You're not responsible for paying more than you owe. The IRS shouldn't get $1 or more from you than they need to. At the same time, we need to stress that up front. You want to be honest and actually take what's legitimately yours. So it goes both ways, to be fair on both sides.
Absolutely. Well, Neil, let me ask you this. Everybody this time of year that I talk to is, I can't wait to get my refund and everything else. should you want a refund? What does it mean if you got a refund?
What it means if you got a refund, this is a very interesting situation because as of now, the numbers are showing that there are less refunds this year and the refunds are smaller. So I'm sure a lot of us have been affected by that. A lot of people depend on refunds and see it as a really nice bonus for them to spend and vacation or additions to their home or whatever it is, and they're seeing less of it. But actually, if you got a refund, it means you overpaid the government during the year from your withholding from work or whatever else when the IRS withheld taxes. And they were able to have that money instead of you and maybe put it into an interest-bearing account instead of you during those years when they were receiving all that money. And then now they're giving it back to you, and you could have received all that money or at least had that money on hand. That being said, people seem to be, so you actually don't want a refund. You want to be as close to zero, owe as zero tax as possible.
Right.
Not a refund, but it's very hard. People, we tend to really like the refund and are willing to kind of say, okay, fine, we'll let the government have the money, and we'll be happy when we get a refund.
Well, it's not a bonus. It's your money.
It's not a bonus at all. It's your money. It's your money. But people, we become very attached in a way. I've joked with other tax professionals to say we've become very attached to our refunds. I'm sure a significant part of the CPA's job is during tax season and afterwards are to get emails and calls from people saying, "Where's my refund?" So those refunds mean a lot to people. They really shouldn't, but
no matter how many times you say it, it doesn't seem to matter.
Right. So actually, this year, if the refunds end up being lower and there are less of them, it was actually beneficial to us as U.S. taxpayers, right? Because we got less of a refund, we paid less, with less taken from our withholding, and the government, it was detrimental to the government, right? Because then they didn't get as much withholding that they could have used, right? Maybe to pay down some of our deficit during that year. But we weren't happy with it, and they gave something that the people didn't like. So it was a lose-lose in a way, although it could have been turned into a win-win. Yeah. But people just love their refunds, and if we love them,
better to have the money
all
year round than
the government have the money too.
Thanks for my money back.
Well, that's how I see it.
Yeah. But let me bring something up that pertains to my business as a personal injury lawyer, and I always tell this to my clients. Personal injury proceeds, you're involved in an auto accident and you get a settlement. Are the proceeds that you receive, the net proceeds, are they taxable?
No.
They're
in
not
almost
taxable.
all instances, they are not taxable.
And in fact, the medical bills that you have to pay out of the settlement, are those tax deductible?
They are tax deductible, absolutely.
So I've been right all these years. Good.
Well, yes. I mean, you have to, it's an interesting discussion because tax deductible meaning, you still may have to meet certain standards to be able to take those deductions, but they are absolutely taxable.
You should certainly give it to your CPA.
Absolutely.
Okay.
Especially, I'm sure you get people who have very significant tax bills.
Yeah.
I mean, sorry, medical bills.
Oh, yes. Sometimes, sometimes smaller, but sometimes they're monstrous.
Correct.
Yeah.
And those may very well be a nice tax benefit.
Yeah. That's why I always give the checks to the clients.
Absolutely.
Now, Neil, I can't thank you enough for your time today, but I want to ask you real quick, and if you could make it very clear to anybody who's listening or watching, who is somebody that needs to hire somebody like you, a tax attorney? Who would be somebody who needs, like your type of client? Because not everybody needs a tax lawyer.
Not everyone needs a tax lawyer. I think that if you feel upfront that you want to be open and say and have a matter that you think may be beneficial to be privileged, you may want to just pick up the phone and call and see, and perhaps we could have a consultation. Perhaps you're entering into a business agreement, or making some kind of gift to someone, or some other personal transaction. You want to be sure. That's in the front end. And in the back end, if you do have IRS tax issues, if you owe IRS penalties, if you owe back interest, if you have back taxes, if you haven't filed returns that we've discussed, a lot of those things we can resolve, or we can make better. Sometimes we can't, but at least we're moving forward. But a lot of times the penalties we'd be able to abate, which would then lessen the interest. We may be able to look at your information and find that by filing a return, you actually are owed money from the IRS. So those are the kind of people, if you're facing immediate collection issues from the IRS, they're sending you a notice saying we're going to levy on your assets. If you have received a notice that they filed a notice of tax lien on you, and you see that it's killed your credit score, we may want to see if there's a way that we can get that removed and withdrawn and removed from your credit history.
I know, and in Florida has the homestead law. Homestead law will not protect you from the IRS, will it?
It will not. No.
That's what I thought. How do you charge for your time, Neil? That's what people want to know.
Yeah, that's always a big question.
Yeah,
right?
It always comes up, and then I say it depends. But can you give us kind of an idea of what goes into determining a charge for your services?
Sure. So I'll talk to someone on the phone or sometimes via email about their issue, and sometimes I'll take an initial review of their documentation from the IRS or its tax returns. I'm not going to charge for that time. Then, if it's something that I think we can help on, we'll do a consultation. We'll say it's an hour. It usually goes a little longer, and that's okay. And I charge $300 for that at this stage. And then perhaps we can resolve the issue within that amount of time. Then if we can't, we'd have to set up some kind of retainer agreement. Just depending on how much, whether it's 1,000, whether it's 2,500, or more. Because you never know with the IRS, and you never know with the tax law what's going to happen. So that's how I charge, and then I have to kind of work with people as we go as to how they will pay, because I can't put a ceiling on how high. It just depends what's going on. In order to do my best job to protect people, to hopefully lower their tax rates and their penalty rates, and really protect them civilly and possibly even criminally. I think that carries a lot of weight.
I would say so. Holding on to your money, staying out of jail, those are pretty important things.
And sometimes, your rights, meaning your right to privacy. What the IRS can get into, that you may want to say, hey, you have no right to go there.
So what you're saying is that I should not friend the IRS on Instagram, even though they have an Instagram?
Yeah, isn't it hilarious? Yes. I'm sure to connect with taxpayers and be more friendly, but yes, the IRS does have an Instagram page.
Okay.
So
I'll make sure.
So be sure not to like it.
I will unfollow it.
Although I'm sure it can provide very interesting information.
Oh, I'm sure. I think I'll call you for that, though. Actually,
yeah, I get the notices all day of what's going on in real time. So I'll tell you if anything interesting comes up.
If anyone wants to get in touch with you, can you tell them again how to reach you, Neil?
Yeah, sure. So you can call my cell or my phone at 954-944-3929 or 561-948-2298. You can also email me at nrumbak@rumbaklaw.com. So that's NRUMBAK@RUMBAKlaw.com. And I'll be happy to talk to you.
Well, again, thanks so much for being here, Neil.
Jeff. It's been a pleasure.
This has been a lot of fun, a good discussion. This is Neil Rumbak, tax attorney. My name is Jeff Adelman. I'm a personal injury lawyer. I can always be reached at 954-341-2777 or email jeff@adelmanlawyers.com, ADELMAN lawyers.com. I want to wish a very happy birthday to my dear friend Iran Jerez. And yes, and I also want to wish the Lightning better luck in their second game. Last night, I know you were very upset.
I'm a Lightning fan from Tampa, and it was a very painful loss and unexpected loss.
I think we should probably give a shout out to my cousin Elliot Stern as well.
We should. He made a connection many years ago.
We were at my cousin Elliot Stern's bar mitzvah many moons ago. We did not know each other back then, but we figured it out.
Probably 1993 or so,
something like that.
Yeah, I think we all had some kind of hockey theme because we all.
I
prefer watching hockey. I don't play hockey, but I was a big hockey fan.
Yeah, I had to in '93 because I was at Busch Gardens, and I think it was the second year of the Lightning.
I moved to Tampa the first year of the Lightning.
Hey, Elliot.
Well, give a shout out to you.
Absolutely. So. Well, anyway, thank you to everybody for watching or listening. The replay will be available on the Facebook page, and it'll also be available on podcast, iTunes, Google Play, and Spotify. I'll be with you again next week, April 18th. We'll have Nancy Brodsky on, who is a family law attorney. We'll be talking about collaborative divorce, ways of trying to keep your divorce expenses a little less than what they could be through a technique that she uses, and I'm looking forward to that. All right, well, thank you again, Neil, we'll definitely have to hang out after April 15th.
Absolutely.
All right.
Yeah, I'm looking forward to it.
Bye, everybody.
Bye-bye.